It's a difficult region to understand because you're covering the Middle East, North Africa, and the Levant. Correct. And there's a lot of complexities, or at least perceived geopolitical risks that go into this.
Well, it's not one region. It's really, as you say, three regions. And the first thing you need to make a decision about is where do you think the price of oil is going? Because that determines whether you're focused on the Gulf or you're focused on the oil importers, which are Morocco, Tunisia, Egypt, Jordan, Lebanon, Palestine. So that's the first macro decision you need to make. And if you get that wrong, then you're in trouble. But if you get it right, then you do well.
And so how do you make the decision as to why wouldn't I just invest in oil and be long oil and levered oil, which is liquid, it's easy to trade, versus going into something that's perhaps more opaque and trying to go into equities in these different regions?
I mean, it's much more complex than oil. The Gulf markets, which are oil dependent, in the past they've lagged oil, but they're basically driven by government spending.
Okay.
So unlike in the West, where government or the public sector represents maybe 10, 20% of GDP, in the Gulf it's more like 60. These governments get their revenue from oil, but also they get their revenue from their sovereign wealth funds. So Kuwait and Abu Dhabi, because they've been saving for so long, they probably make as much from their savings as they do from selling oil. So it's a bit more complex. Another reason to look at the stocks is because this is probably one of the few remaining areas in the world which isn't well researched. Sure, if you look at the top 20 names in the region, they're pretty well researched. So Amar, National Bank of Kuwait, National Commercial Bank in Saudi Arabia, those are covered by Merrill Lynch, Morgan Stanley, Goldman Sachs, HSBC, you name it, plus all the regional and local guys. So if you go one layer below that, there are many companies that have maybe 1, 2 analysts or 0 analysts. And if you do your own homework, you can make some money.
What else do you like, or what are the other themes, and how do you think about them in the region right now?
Our largest country exposure is in Morocco. And it's fairly simple why. Morocco invested 40% of its GDP in building its infrastructure for 8 years running, which is higher than anywhere else in the world other than China and the Asian tigers. So far higher than any of the Western countries or any of the Middle Eastern or African or Latin American. And if you invest wisely, you reap the rewards eventually. And if you go drive around Morocco, you'll see that the highway system is second to none.
Yeah, it's pristine.
The railroads are excellent. The ports are fantastic. And because of that, they've been able to attract a lot of European companies, namely the automobile manufacturers, to build cars in Morocco and ship them out. So initially, when the Iron Curtain came down, most of the Europeans thought, okay, let's go to Eastern Europe because it's cheaper. But now wages have gone up in those parts, and it's cheaper to build them in Morocco. So that's one big industry that has grown in Morocco.
Yeah, it feels like it could be some sort of play like Mexico and the U.S., where you have the productive base into the developed countries. Just, an interconnection right there. So you've got Morocco directly into Europe.
Exactly, but there's more than that. The last flight I took to Casablanca was in October, and the flight was packed, and 80% of the passengers were transiting in Casablanca and going to sub-Saharan Africa. So there have been huge efforts to open markets in sub-Saharan Africa for Moroccan companies. And the king, who I think is one of the best rulers in terms of economic governance in the whole Arab world, I'd say him and the Sheikh of Dubai are the 2 top rulers, with the rest being either mediocre or poor. So the king has gone on countless trips, and not just to Francophone West Africa, but even to East Africa. And now all the big Moroccan banks have significant operations in sub-Saharan Africa. And Morocco Telecom is very big in sub-Saharan Africa. And the second-tier companies are following. And the problem in Morocco is valuations. So if you look at it superficially, the top, say, 10 names all trade at mid to upper teens. So it's not cheap. And that's because of exchange controls. But if you look at the second-tier companies, you find a lot of value. And our portfolio as a whole trades at about 10.5 times earnings. There are only 16 long positions and 2 shorts. The long book trades at about 10.5 times earnings with growth of about 12%, 15%. And to me, that's important because I look at investing as a bit like walking a tightrope. The higher the valuations, the higher the rope is from the floor. So if you fall, you're going to hurt yourself if it's high. And also the higher the dividend yield, the bigger the cushion on the floor or mattress.
Right.
So if you do fall, it doesn't hurt as much. So if you buy something at 20 times earnings, anything goes wrong, this thing's going to trade at 10 times earnings and you're going to really get hurt. But if you buy it at 8, 10, you don't have that much to fall if you get it wrong.